In today's video, we're going to be going over my strategy and the basics behind it and everything you need to know so that way you can also become profitable using this strategy. I'm also going to throw in a live trading example at the end so you guys can see how it works in real time. Alright, so for starters, we need to know what is a fair value gap. So a fair value gap is pretty much a 3-candle pattern where the wick of the first candle and the wick of the third candle don't overlap, leaving this gap in the middle candle, which would be our fair value gap. Now here we have a bearish fair value gap example. So as we can see, we have the first wick of the first candle and the wick of the third candle, and they don't overlap. So this right here would be considered our bearish fair value gap. And in this example, this would be considered our bullish fair value gap. Now we also need to understand what an inverse fair value gap is. So an inverse fair value gap is pretty much just a normal bullish fair value gap or a normal bearish fair value gap, where instead of the bodies respecting the fair value gap, we violate it and we go straight through, getting a candle closure right below it. And if we can look at a bearish example here, we have a bearish fair value gap. And what most people would do is they would sell at this bearish fair value gap, thinking of it as a resistance kind of. But instead what we see here is that the body closed above this bearish fair value gap, which is now considered a bullish inverse fair value gap. Now we also have to understand what liquidity is. So liquidity, to sum it up and make it as easy as possible, is pretty much where stop losses are. So let's assume that somebody here is buying in on the retest, aiming to go to this high. Where would they put their stop loss? Well, most people would put their stop loss at this low. Then most people would put their stop loss at this low. So what the market wants to do is it's going to want to reverse, so that way it can be able to take out all this liquidity here. And then it'll refill to go back to the upside because we left liquidity here and we left liquidity up here. Now here's a simplified version of what my strategy pretty much is. So what we can see is that we came down, leaving this low. Then we came back up, sweeping some buy side liquidity, as well as that we came right back down. And as I mentioned previously, we took out this low with a nice reaction off of it, which means we swept some sell side. And what we can see here is instead of bouncing off this bearish fair value gap and using it as resistance, what we do is we get a candle closure above this bearish fair value gap, which now makes it a bullish inverse fair value gap, which is where you would hop into your long position with your stop loss being a candle closure back below this now inverse fair value gap, and you would just simply target opposing liquidity. Now let's go show examples from a week straight so we can see how this strategy works and how we can control risk management using it. All right, now we're going to backtest a week straight of using this one strategy. Remember, we're looking for a bounce off of a bullish or bearish fair value gap, as well as that we're looking for a sweep of a higher low with a nice reaction off of it. And we're looking for good momentum through a bearish or bullish fair value gap to be able to consider it an inverse fair value gap so we can take it to opposing liquidity. So let's play out the tape. Okay, so here, what do we see? Well, what I see is that we made a new low right here that we then swept, as well as that we see that we're holding up on this bullish fair value gap. And as well as that, you can see that to the left, we have this bearish fair value gap that we were once using as resistance, now gets broken. So what you want to do here is you want to hop into your long position. Now, what I preached earlier was you want to have your stop loss being a candle closure back below this bearish fair value gap. Now that's an inverse fair value gap, but considering the fact that we have this bullish gap that we're also using as support, you're going to have it to be a candle closure below this bullish fair value gap, targeting opposing liquidity. So we play out the tape. Let's see what happens. All right, we can see that on day one, it ran straight to our target profit. Now let's go on to Tuesday. All right, so here we are on Tuesday. This is pre-market. What I see is that we swept out this newly formed low, as well as that we're bouncing off of a higher time frame PD array and this 1 minute bullish fair value gap. We're also sitting inside of this these two 1 minute bearish fair value gaps, which a lot of people are going to be selling off of. But when we see this good momentum over this bullish fair value gap, most people that were in their sell positions are now buying out of their sell positions. So there I will be getting into my long position with a stop loss being a candle closure back below this bullish or now inverse fair value gap. And I'm just going to be simply targeting this high that's inside of this bearish fair value gap. So if we play out the tape, let's see what happens. All right, so there was Tuesday. Another one and done day. Very simple. Now let's move on to Wednesday. All right, so here we are on Wednesday. This is, again, a pre-market trade. So what I'm seeing here is that we have an SMT with ES and NQ. If you don't know what an SMT is, it's pretty much when NQ takes out a high and ES doesn't, or vice versa. So what I see is that we have an SMT with ES. As well as that, we're bouncing off this bearish fair value gap. And what I see here is that we have this bullish fair value gap where a bunch of people are going to be buying from, But once we play out the tape and we see that we actually get a death candle through this bullish fair value gap, a bunch of people that were in their buy positions are not going to be selling out of their buy positions. So what I'll do here is I'll have a candle closure above this bearish fair value gap since price is supporting it right now. And I'm just going to be simply targeting opposing liquidity, in this case being the bottom of this slight LRLR. All right, so as we see, Wednesday was another one and done day. Now let's move on to Thursday and then Friday. All right, so here we are on Thursday. This is right at market open. What I'm seeing here is that we took out this high as well as that we left this bullish fair value gap. Now we aren't bouncing off of a higher time frame fair value gap, but when you have such strong conviction and it's aligning with a higher time frame bias, you don't really need every single step. You can just go for an A setup, which would be you either take out a higher low with a nice reaction or you're bouncing off of a higher time frame fair value gap with a nice reaction. So if we play out the tape, we can see that we instantly decide to inverse this fair value gap on this next candle. So what I will be doing here is I will be hopping into my sell position here with a stop loss being a candle closure back above this now inverse fair value gap, as well as this bullet or bearish fair value gap that we just formed. And I'm just going to be simply targeting opposing sell side liquidity. So now if we play out the tape, let's see what happens. So as you can see, we instantly dumped. This was probably like a 2-minute trade. So now we're going to be moving on to Friday and see how we can close off the week. So here we are now on Friday at the end of the week. So what I'm looking at here is we took out this low with a very nice reaction off of it, as well as that we're bouncing off of a higher time frame bullish fair value gap. And I see that we have this bearish fair value gap here. So what I'm going to do is I'm going to wait to see if we can inverse it. If not, I will just be patient. So what I see here is that we inverse this fair value gap. So I'll be hopping into my long position here with a stop loss being a candle closure back below now this bullish fair value gap that we formed. And I'm at least targeting the next high, or I can go for opposing liquidity. And if we play out the tape, let's see what happens. All right, so as you can see, we hit our full target profit. So now let's go over a little recap of everything that we just learned and a recap over this week. All right, so now let's just quickly look at the trade recap.
Order filled.
We're holding up a 5-minute volume imbalance. We're holding up a 3-minute and 2-minute fair value gap. We got good momentum over this 30-second as soon as we took out this low with a nice reaction off of this low as well. Stops being a candle closure back below this 30-second inverse gap. All right, stops are going to break even.
Order filled.
All right, there's first TP. Gonna be changing my orders now to 2 and letting the rest ride to my full target.
Order filled.
All right, and there's my full target. So we are all out there. All right, so just to quickly go over everything that we learned from this video. So to sum it up, nice and easy, we pretty much want to see a sweep of a higher low with a nice reaction off of it, a bounce off of a higher time frame PD array, and good momentum over the IFEG, and then just simply targeting the next high or opposing liquidity. Every trade that was taken in this video, it was posted in my Discord. I currently have a Black Friday sale of 50% off the lifetime membership going on. So if you're interested in it and you just need some help with the IFEG or just trading in general and psychology, you can go ahead and click the link in the description and it will send you straight to it. So as you can see, we pretty much went 5-0 this entire week. Obviously, not every week you're going to go 5-0, and some days you're not even going to be able to trade. As long as you have good price action and you get all of these 3 things, you should be good to go when it comes to the inverse fair value gap model.